everybody, and welcome to, of course, the stream where we're seeing some big red coming back into the markets. Can't say it was probably unexpected. Some of the things that are happening right now are pretty good. Some are pretty bad. I hope everyone's doing okay at the moment and you're surviving what looks to be, a bit of a continuation of this downtrend. So we continue to see commodities limit up. We continue to see certain commodities go out of control. I mean, US oil here still was almost 130, now 120. But I firstly want to say welcome everyone from having a weekend. Could you wait for the market? I don't know. For me, it was like, ooh, is it going to be horrible and red? I had a feeling it might be. Let's say a big welcome to a few people here in the community. We've got Andrew, Ginny, Mark Wilkins, Chris, Fan, Gary, Jason. Thank you very much. And there's even more. Seems to be hundreds of people out there right now. So a few people are saying, very sad. Gold 2000. That's right, Mitch A. That is correct. Gold 2000. And Fox says portfolio is rather flat, surprisingly. Well, you probably own a bit of diversification. You're not all in the tech. The tech side is really where the brutalization has happened. So there's a big difference between, really the tech side and everything else right now in the markets, unfortunately. So a quick look at this. Okay. All right. Well, let's talk about this Nasdaq. It is firstly not in the middle of anywhere land, which is kind of a problem. So we're closing here. We've got, 25 minutes till the close. And the Nasdaq doesn't really sit on a support. I mean, is 13,000 a support? Yes. Is this a support? Not really. Is it underneath 13.5? Yes, which was the last kind of level of big support. Because remember, that's where the gap is. So let's have a look here at the Nasdaq from a non-futures perspective. And you'll get an idea that the biggest issue here is if you buy into this close, I mean, you might be correct and maybe it bounces around and this is actually where the bounce happens, but there's no theoretical technical support. Like you look at most times that we've purchased, obviously a week ago or 2 weeks ago, whenever it was, we saw that low, that 13,000 low. If we come back and retest this, is this a level that some people will want to grab? I'm sure it is. If this bounces, of course, it could be the bottom. That's what we were mentioning. If it gets underneath here, though, ooh, not good. Next up, I would think is probably around that 12.2, 12,000, 12.4, that kind of area. And you really start to look to the US 500 at that point. This is where we bring up the US 500 and we say, okay, what's happening here? What is going on here? Now, funnily enough, not all is down. Okay, so you'd think, oh, well, Tom, everything's down. I'm feeling so bad. Someone said before they had a flat portfolio. Well, if you were in certain stocks, we'll bring them up now, it hasn't been that bad. And the trades have been in non-conventional stocks. Remember, a lot of retail traders think just tech or just something to do with internet. And that's fine over the long term. Or look at Jets today, down 10.61%. That trade was gone when the Ukraine came in. You had to the whole Ukraine-Russian thing came in to the news. That was over. But think about some of the things we've mentioned recently. We've mentioned TAN, very good. We've mentioned gold, very good. Now, I haven't mentioned utilities to the general community, but I certainly have mentioned it to the private community, very good. So some of the best sectors have been in rotation. And this just kind of proves time and time again that if you know how to follow the money, how to follow the flow, that you won't get burnt as much, especially in trading. I mean, obviously your investments are separate to your trades, but just remember today, all of a sudden we see these sectors outperforming everything else in the market. Because right now, none of these, or very little of these ones down here, look to have found their bottom. So let's just check out TAN for an example. All right, let's have a look at TAN. So we'll bring down here. We'll bring up TAN. So why has it bounced? Well, think about where it was come the Friday close. You've got a base, you've got a potential Wyckoff, you've got a breakout, you've got a retest, and you've got a pickup. Yeah. So that's certainly a big move. Jason Chen says, thanks to Tom, use GDX to hedge. Congrats. That's good. And John B says, Jets crash. Well, I did say with the Jets, it's over. As soon as you saw oil go through the roof, look, I think maybe it's worthwhile explaining Jets. Here we go. So obviously Jets was one of the things I was in January. Now, why? Because I like the trade. Would I take it again? Yeah. I liked it here. I liked it here. But you cannot like it anymore as soon as you hear that news. So we hear the news, obviously this day here. What do? If you enter these prices here, are you down or are you up? You're basically slightly down. Would anybody think that people are going to travel, which is this play is about travel? Because remember, it has long. If Jets is going, one of my arguments was that you would be getting into all the travel. Is travel going to be a great thing right now? Is oil price going to impact Jets correctly? No, it was bad. So all of a sudden, the good trade goes bad. You have to know when to cut things. It's only logical that it's over. So that's how it is. All right, I want to ask everyone in the community this right now. Where do you think we're at in the stages of economic crash? Okay, so I want you to tell me how you're feeling. Are you thinking we're in capitulation? This was something we asked of a poll recently on Twitter, and maybe I'll poll everybody because I'm always interested to know where everybody feels. Are we panicking? Are we feeling capitulation? Are we freaking out? Are we despondent? This is something that's pretty important. Andrew Sayer says mass panic. Denial. It's very interesting to see where people are at here. Red light. I might ask it on Twitter. Actually, let me ask it on Twitter. It's very important we understand where everybody's mentality is here. This is incredibly important to the trading philosophy. When you understand where you are in the kind of crash cycle, you can get a bit of an idea. And I need to be honest. Like, honestly, I'll bring up this cycle first. So this is just the standard cycle of, let's say, pullbacks. Yeah. So you've got because we do want to understand this. We've got anxiety. So I'm going to say we're probably past that to a degree. Now, are we in denial, panic, or capitulation? So is anyone feeling I'm 100% out of markets? I can't afford to lose more. Is anyone feeling that? Or is anyone yelling at their screen? We're blaming the government. So which area do you think you're in right now? It's very important we understand this. It's actually almost more important that we understand this than we understand the charts. So some people here thinking we're in anxiety. No panic yet. Oh, interesting. Green Thought says, I'm at the anger zone, but I'm not selling. I'm sorry to hear that, sir. Okay, denial by the dip. Power will save us. Power. Yeah, the American system is in some serious problems. So obviously here, Jets, my goodness, absolutely tanked due to the oil price. They got through that support, and if you wanted to short today, bang, 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 it was gone. As soon as that went through, that was the end of the support there. Wow, brutalization. Hopefully no one's in that anymore. I don't even know how you could be. I mean, I totally understand why Wall Street's selling the rubbish out of it. It's not a good solid position anymore. US, and that's why you have to move. Sometimes remember, I've always said this, I don't like airplane companies. I will trade it, I will not own it long term. Do not like it. Bad. But you've got to move where the money flow is. And you've also got to understand when situations change. And of course, that one there was a massive situation change. So here's the big rejection candle that came in on the 2-hour. I think it was a pretty easy short day, especially when you see candles like this. You've already been hugging this 2-hour 20 on the way down so far. You get a massive shooting star pin bar candle, huge short potential, pinging a little bit up here into the close. But again, I look at this and I go, well, what support do we really have? I mean, you've got a 4,200. You've obviously not got the 4,100 or the 4,050 or any of those types of things. It's hard to see that this is the best place to buy this market. All right. And that's what I guess I'm getting at. If it turns here, fair enough. But let's have a look at the weekly. Just get a bit of an idea. Because I don't know if this is the low. You know what I mean? Like, it just doesn't seem like a low to me. Does it look like a low to anybody else? I mean, I'd rather be wrong and it moves around than probably picking these kind of positions up. It just doesn't make sense. What we're starting to put in place here, remember we've talked about this before, is theoretically on the candles, left shoulder, head, right shoulder, neckline. All right. What does that mean? Well, if that happened, it points towards an S&P 500 capitulating into a 3,800 zone, which is exactly 20% down from top to bottom, which is pretty much what you would hope is around the worst case scenario. Because if you get much further under that, then you're talking about recession. Remember, when you get these big sell-offs, let's have a look here at the 18 sell-off. The 18 sell-off was 19.84%. Maybe 20% if you take it from the top. A pretty brutal sell-off. Pretty brutal sell-off. This is currently not this. This is a recession. There are no other big pullbacks in the US 500 if you go back through, in comparison. So if we go back through the last very long period of time, obviously we have the GFC, but every single other one of these big pullbacks, even the one over here, they're 20 to 21% in size. So, when you think about it, we have like this recovery from the GFC. We've gone faster in the business cycle. Is this the type of existential crisis that we're currently facing? Is it savable? That's what you've got to ask yourself. And at the moment, it doesn't look like it is. But of course, that's how always these fearful times are. You look at it and you think, wow, how can we sustain, at least oil's come down a little bit from its high. How can we sustain all of these massive pickups? At least copper's come down today. Let's have a look at some of the ones that I've been fairly bullish on. Palladium. I mean, that's a huge, this is interesting. Okay. So palladium is dumped hard here, which is good because it's too expensive. For anyone in the private community, if you didn't start scaling off some of this yesterday, you're probably crazy. But anyway, this type of crash, because this is a big crash. Like, let's go to the daily here for a second. Let's understand. When you were buying palladium, it was here. So palladium has gone up 40%. One of the best metals or best things on the market in the last couple of weeks. It went bubblicious instantly, parabolic, and then it crashed hard here. And someone, I'm sure today, got beaten up in these commodities. I mean, this is 18% switch. Ooh, and I'll tell you this. That's not normal. It's actually probably a good thing for the markets here. that it's come down. I would probably expect some form of bounce. Would I trade it? The answer is no. This is risky money. Risky money, just like oil is risky money. But if you look at it and you think, what's probably going to happen now? It's probably going to be dead cat bounce and then it's all over. These kinds of moves, I think they're too much, too fast, too quick, and they're not probably sustainable. Gary Saini says palladium dead cat bounce incoming. Yeah. All right, let's look through a couple other stocks. So we're basically, the problem here coming into the end of the day is I don't even know where the hell the support is for the US 100, US 500. The Dow is finding new lows. So I don't like the close. I mean, the close, everything points to me, and I'll ask the community this, is there further downside here, guys? Before we go up, is there further downside? I would have to say probably, because we're at a point where, I mean, what kind of support do we really have here on the Dow? What type of support do we have here on the other things? All right, let's scroll through. Obviously, gold hit 2,000. Let's take a look at gold. Very nice. Gold's doing okay. Now, gold is kind of like, you know, some people see it as a hedge. It's not really. It's more of a currency, a safe, let's call it a safe haven currency to a degree, but not really a super safe haven currency. So, you know, if I would rather own something, I would still own American dollars usually, or I would still own Swiss francs or something like that if I want to be a bit safer, because I know the way that gold trades. So gold's doing well, but you just got to keep in mind that while it's looking great right now, we need certain factors that I will continue to follow to hopefully hold up, because gold is not as safe as everybody thinks it is. It's not. It's very dangerous. VIX sitting at 35.72. Now, someone said before, what's up with nets? Well, all of these stocks are down. You look at net. I mean, my analysis here of net, $92. It's incredibly volatile. Up, down, because the market doesn't know how to price it. What you can clearly probably see here, though, is that it has a lot of latent demand. Look, the stock's overpriced. It always has been. It's been overpriced for a while. I mean, I liked it over here. I thought it was ridiculous over here. So it's overpriced. Good stock, overpriced. Crowd, good stock, overpriced. That's actually a false break there, by the way. ZS, Zscaler, I'm looking for it cheap. I want this thing down to 158. I like this industry. You know I like cybersecurity, but I want ZS here. Come here. And if that happens, you're going to see all of these cloud kind of, you know, security stocks coming down pretty hard. I mean, look at some of these names here. You know, one thing I'm finding very difficult to buy is consumer discretionary. Consumer discretionary is very tough to buy at the moment. And check out this. I don't even understand this. How is Apple still at 159? Jacob Waterman says, looks like a recession. Yeah. I mean, if oil and the commodities don't settle down, remember, this does help the Fed to a degree, but what will be the teller is, look at this. The US 2-year, 3.91% or 3.91% up. The US 10-year, 1.84% up. It's not good, guys. We're getting closer towards the horrible inversion. It would be sad if that happened. It basically means, like, some people are arguing this. They're saying that we went through a business cycle, which usually takes 5 to 7 years, and we did a business cycle in 18 months to 24 months. I mean, that's crazy to think about. Now, I'm not sure if we did do a business cycle because we didn't see utilities and the normal defensives come through, but wow. Red King says, Buffett no fool. No, that's right. Buffett's good. Buffett knows what's up. but he also doesn't, or he doesn't trade, does he? Invest. So yeah, market's still falling off here. US 100 now sitting down 3.34%. Sandola 77 $4 super sticker. Thank you very much, Sandola. Also, welcome and thank you to 1,045 people here. But look at this Apple. I mean, this is actually Buffett's number one big holding, isn't it? In his private and his private kind of public stocks. So yeah, I mean, this thing is very strong. I'm surprised if Apple fell and Microsoft really fell through, which I don't think they should because they're actually fairly well priced. But imagine if this thing falls. I mean, I've always thought Apple is a little expensive in some ways. Very nasty if it goes. And it hasn't even gone. A few people will be wondering about Tesla. Now, Tesla's the only one that's coming down to a support here into the close. So Tesla 805. Look, the Tesla is coming into the first level of support. 800 is a psychological level for this. So if it comes in, are people going to want to buy it? I would say they'll be excited about it. At 700, it's the next level. So obviously we had 800 last time. We talked about it. If it breaches 800, you were stuffed. Unfortunately, it went to 700. And I feel the same way about it now. 800 is an interesting level. It's one of the only stocks coming to support. There will be some form of buyer, you would think, around here. If it breaches through this zone, I could see it going to 700 fairly fast. Brendan Schwab says, why do you think gold is dangerous after a 10-year textbook cup and handle now breaks out? Because I don't use 10-year textbook cup and handles, Brendan. I'm not a fan of the cup and handle. I know what you're saying, but I wouldn't trade myself off a 10-year cup and handle. I like gold. Have I been talking about it for ages and cop and shit for it? Yes. Have I? Absolutely. I just caution you to think that, gold was good. Gold is good. What he's talking about here, by the way, is I'll show you. But I hate people that use massive time frame cups, and I don't even have it on this particular gold. So here's the reason. Because if you use these giant patterns, you'll lull yourself into false sense of security over, being able to get in. So here's the cup, all right? And here's your handle, and here's your breakout. So that's what people are arguing. Gold could go on a massive run. I'm hoping it will. Obviously, I have positions partially accordingly, but trading off these giant 10-year cup and handles and stuff, I'm not so sure that I would believe a 10-year pattern. That's just me, okay? And I'm a technical analyst. I love technicals. But I'm not so sure that I trust the 10-year pattern. Corey 2K says, why is utilities going down? No? But that's what we're talking about here. I get it. I just don't know whether... basically, if you trade that cup and handle, then you're predicting a lot more. Gold it's predictable, but it needs a certain thing to happen. And it certainly could be happening. Don't worry. But yeah, I'm not going to base it on the cup and handle. The cup and handle, let's say, would be 2%. And I know exactly what you're talking about. Someone said, why is utilities going down? Hey? What utilities are you looking at? Thank you very much, Corey. I don't know. I don't understand. Utilities is up, man. 1.5%. It was the right move. I, in fact, I did some study on this. I put some things into the room yesterday talking about it. And if you don't believe me, there you go. That's what I did. I haven't picked the stocks. And believe me, some of those stocks are up about 5% today, so it's not too bad. Look, right now, the plays have been minerals, utilities, defensives. And what I mean by defensives is defense companies. That's where the money's been going. Atticus F says, when Apple falls, do you think capitulation is close? Yes. Neon 11 dot to 11.20. No way, really. Wow, that's a crit though. We're here 1 minute off, by the way. I mean, there's nothing I can say about the market. I told you already. I don't think it's found any support. There's nothing sitting here. Hey, there's no dot at 11.20. You lied to me, Neon. Joe G, thank you again, Corey. But utilities isn't down, so I'm not too sure what you mean there. Joe G, $2. Nvidia thoughts. Yes, I've been pretty negative on Nvidia. I guess it's coming through today. I mean, it's a nice short. Kind of wish I shorted Jets instead, but anyway. 6.81%. Look, Nvidia, great company, overpriced still, guys. It's expensive, really expensive. My thoughts are this. I still think that there's around this 200, 210 zone. Something weird's going on, yeah? Because we've got the nice support coming through, all of that. But I will look at the semiconductor index, and that's where you've got, wow. Look at the semiconductor index. This is a big deal, like 242. So this is breaking underneath. And semiconductors next stop you would think is 223. And here's the thing. If you look at, can anyone see a pattern here on semiconductors? Anyone see a certain pattern? I'm just going to leave it there while I read some comments. Let's see if anybody in the chat can figure it out. Joe G will continue in a second. Randy Manning, $4.99. Investment question. Are bank stocks, JP Morgan or financial Visa going down because they are pulling out of Russia? Well, that could be part of it, but I think this is becoming a systemic problem. Remember, this used to be just an attack on growth. For pretty much the first 20% or 15% on the S&P or whatever, or the Nasdaq, it was mostly a growth attack. Like you could have been sitting in certain sectors, e.g. energy, banks, etc., and been doing okay. It's now becoming systemic. I'll show you XLF in a second. But here's, the semiconductors is the big problem. I'm not too sure whether that's the problem with it. You've got the 10-year that's come down as well. You've got to remember when the 10-year and the yield was looking better, that was okay for the banks. But right now, you've got the yield curve getting close to inversion and a lot of uncertainty in the world. It's not good for banks. Banks cop it hard if we go into a recession. So a few of you have got it correct, which is, yes, it looks like some kind of head and shoulders. And you are correct. I mean, I don't like, I've always said this, high right shoulders. It's in my course as well. I don't like high right shoulders. Not good. So, yeah, left shoulder, head, right shoulder. Interesting. But for me, the semiconductors, I'm going to be watching it. So let's say NVIDIA hits 200 and semiconductors are hitting 220. And the Nasdaq is hitting whatever the support is. And I'm not saying it's 13, like it's still going down. Not saying it's 13,000 or anything, just whatever a support is. That's where I feel we're getting to a point where, maybe semis are worth it. 223, but you've got to be careful there. I did forget about this trade. This has actually been a good one. I haven't got too much in this. Andy Lee, $5. I think there's still more downsides, what I'm saying there about NVIDIA at this stage. By the way, look at this XLF breaking through its support. Not the best. Andy Lee, hello. Fertilizer question. Run up, then sell off, consolidation or run down. CF, NTR, Moss, for example. Yes, these were really good trades. These got picked up by many members in the community, in our public community and private communities. And it's been a great run. I mean, you've got percentage-wise, if you ran it here from pretty much the day you probably started running it, the price action showed you. And this is the point. You could actually show somebody an alien, let's say, or a monkey. All right, when breakout happens, I'm going to buy or whatever, in these particular stocks that have been sitting. They don't necessarily need to know the news, but they're following it. It's gone parabolic now. So the question is this going to be a sell-off and consolidation? It depends on how bad this, to me, it looks like it's going a little parabolic. Now, traditionally, when these stocks have gone parabolic, which hasn't really happened in this case, like not like this, they've usually consolidated, pulled back. I think if you're not in the fertilizer trade, it's probably over. If you're in it, would I sell? I would scale a portion off. I mean, it's almost 30% in a few weeks, hey, in a few days, really. So I would scale, but there's still possibly quite a lot more here. So you've got to, it's a tough one. I haven't seen the signs of turnover yet. NTR, another one that's gone up huge. I mean, again, percentage wise, look at this. Here's the breakout day, 26%. And then, of course, Moss, Mosaic, breakout. And that's right now sitting at 26%. So they're all very, very big moves. When you've got big moves like this, it's hard for them to hold it, but I wouldn't bet against it either. I mean, look at Moderna. Look at some of the stocks from last year in 2021 and how far they went. It was crazy. Aaron Klink, $5. Looks like genetics found a bottom early. CRISPR, beam, edit, etc. Thoughts? So the fertilizer question is, I can't tell you exactly what's happening, but I wouldn't bet against it yet. Because, and I would personally, if it was me, as my personal opinion, you have to do whatever you feel like, I would descale my position. That is that's personal choice, yeah? Not any kind of advice. My opinion. Aaron Klink, $5. Looks like genetics found a bottom early. Okay, so let's have a look at the genetics. So genetics tough to buy in at the moment. BMO coming down to 62.84, back down near the support. CRISPR finding sub-forward base. All right, fair enough. Look, they're here and they're floating. Could I buy them yet? No. Why? Because unfortunately, whether we like to admit it or not, these companies make zero money. Okay, they make very little money, if anything. In a rate environment where people don't want to lend at the moment, they're not looking healthy. Do I still think that bio and healthcare will do well? Yeah, I totally do. But just if you're doing this, you're not trading it. Okay, it's more of an investment. Just remember that. Beam and CRISPR, they are more investment. They are not trades right now. Are they looking hot? No. You buy things that are in or sell things that are in a trend. This is not a trend. It is a partial holding pattern. So you're correct. It's that they're sitting around and they're probably the best buyer in terms of finding support bases. So you can see these big support bases. And if you have a long-term plan, well, something like Edit is relatively cheap. But you've got to ask yourself why as well. I mean, this is now on IPO lows. Banks do what if we go into a recession? They get destroyed. They get really badly hit. Look at 2020. What happened to XLF? When these types of big crashes come in and you get like really bad times, banks get messed up. 44%. Is that more or less than the rest of the market and tech and stuff? So just remember, if we go into a recession, I would not ever want to be in financials going into recession. I don't even like financials. I will buy them for divs and other things during right times for, in terms of the way we look at them. But yeah, they're not new. Not for me. Thoughts on Google? We'll check it out in a second. Fox, $2. Thoughts on CTRM? CTRM. Pastor, the maritime stock. I haven't looked at this one in a very long time. Oh, man. It's sad people got stuck into these things. Look at that. What a piece of crap. All right. So I actually don't even know what this thing really does. I just remember it back from the hype days where everyone was like, woo, it's going up. Yeah, I bet you wish you didn't buy that at $15. That's crazy. Look, it should be a warning, Kale, that this was all madness, and eventually, and madness will come back into the market. But whether you remember that's a gamble or not is really the question. Look, it's going up here. I mean, it's been up 15% today. Would I buy this? The answer is flat to me, no. It's just not worth the risk. If you're looking at it from a technical perspective and you're thinking there's a breakout, and you're looking for a $2 plus break. Once $2 happens, you're kind of looking for that 267. So, yeah, I mean, if you're in it, sure. If you bought it at $1, okay, cool. It's good. You're up at 88%. Well done. But you've just got to realize what it is. Like, if you get past here, good news. You should be able to go higher. It's not looking shocking on a chart. I mean, you look at this weekly rejection, it's okay. But yeah, I wouldn't. This is not my kind of cup of tea, man. Unless you know something I don't about fundamentals there. Zach Harter, $3. Tom, could you look at OIH, Vanek Oil ETF? Sure. Oh, that's terrible, isn't it? You know why it's so terrible? I know you might say, well, Tom, it's not terrible. It's terrible because of where it's been in the past and where it ended up being. And I think a lot of that's because of when oil, remember when oil went negative? A lot of these stocks stuffed up. So yeah, it's broken out. I'm not too sure what you need, Zach. Like, I mean, basically the problem with this trade is it's not so much. I mean, look, if you were looking at this, you would say, okay, we've hit a resistance. We're around that level of interest. The next level of interest you'd be going is 375. But I'm not convinced the TA here is really the story. So it looks great and it looks like it's running. That's cool. I would probably see how much of it is natural gas. And you've just got to remember it's the trade is really more over here on US oil. So if you think US oil is failing a bit, then you've got to be wary of this one here. For me, it's kind of at a resistance, like at a bit of a heavy zone. And then the next heavy zone is 360, if I was looking at this just from a technical perspective. Alpha T, $2. UEC weekly upward range. UEC, uranium energy. Yeah, so this was a good pick by people that were grabbing uranium over the last day. I think that this is not a bad move. A few people had uranium pickups and they've done very well today. Look at that. 18.65% out of the gates. Very strong. Yeah, I still think there's more run in these uranium kind of things. I'm not too sure what government opinion will be on, obviously, nuclear. Whether because of that scare the other day, people shy away from it, or whether they'll be able to get it through. That's an argument that I can't answer. But yes, price action wise, nice breakout. Obviously, you're looking and targeting those previous $6 highs. Could be some nice moves there. Thank you, Alpha T. Thanks, everybody. All right, well, we've got 1,050 people here. Let's go through Google, which was a question before. What do you think about that? Look, Google, I like it as a company, obviously coming down to its support. Look, the more it goes down, I think what it's doing is it's saying that it's hit a earnings high, basically, is what the market is kind of considering here. Because on some level, Google doesn't look that expensive. Case in point, if we bring in this and we bring in Alphabet, all right, and then we bring that in and we look at it on a standard PE ratio, I mean, it's trading now currently at 2642 at 23.55. That's starting to get down there on its own ratio. Now, obviously, it's grown pretty damn amazingly over the last year. You just got to ask yourself the question, is Google going to continue growth or is it going to weaken? And for me, I mean, I have YouTube, whatever you want to call it, the subscription. I just think getting rid of the ads is totally worth it to me. I'm obviously on YouTube. I understand that a big portion of I mostly watch YouTube. I think of YouTube as Hollywood. I'm not saying I'm a grade celebrity. I'm certainly not. But I think of it as Hollywood. Who cares so much about people like, I mean, George Clooney, obviously people care about, but who cares about Hollywood people anymore? Let's ask the community. You go through, do you like people on YouTube more now because they're more relatable, or do you like the Hollywood peeps? Tin Neo Min, I'm not sure if that's how I say it. Canadian $5. Sorry if I butchered your name, man. Is sand a bargain compared to FNV? Okay, we'll check that out in a second. So we've got here Sandstorm. Oh, this is a gold company. And what was the other one? FNV. So FNV is 30 billion, running up pretty hard here at a resistance. And then sand is way smaller, 1.52 billion. I mean, both have very similar kind of technicals on them. Obviously, sand has not gotten back to its previous highs, whereas FNV has. Bargain question is not really something I could work out for you. I mean, technical analysis says both are on a run. If you were saying which is the cheaper compared to comparable price in the past, you would have to go with sand. That doesn't mean it's the best company to own, though. They're totally different. I mean, this one's 31 billion, and this one over here is like 1.5 billion. So you need to look at their mine, look at their costing on producing gold. If you want to figure out which is the bargain, I mean, fundamental analysis is the only way to do that. TA will not show you bargains. It just shows you momentum and price action and psychology of breakouts. And so far, let's see which one's done better. I mean, this is broken out since the 15th of Feb. This is broken out only recently. So really, the market liked this more, 17% up. And from the breakout, almost 17% up. They're pretty similar. But that one's only started in some ways. This one here has been going for a little while. Can't answer the question. Not easy. Google to 2000. Yeah. That would be crazy. Seb Fox says YouTube is huge now. I use YouTube more than any other TV video content provider. Yes. Even my parents are all over YouTube now. My mum's doing one of the courses, which is kind of cool. They love it. Good. They get a lot of value out of it, which is awesome. Alpha T, $2. INGR ETF, daily and week telling different story. INGR. Well, daily is really horrible story. Let's take a look at the weekly. Weekly is not a great story either. I don't like that. I mean, unfortunately, Alpha. The problem here is you've got this support that's breaching below. And I feel like both are telling a fairly similar story, really, to me. I mean, this is just to me. Maybe I got the wrong stock or something. I mean, that's like a flag with obviously whichever way you want to look at the length. You've got a big support that just got breached today. That's a big support there. So not ideal. Unfortunately, I don't like it. Where does it go? I mean, it could be like 75 next support. So markets closed. They've continued to sell off. US 100 now down 3.55%. Everything, just quickly recap here. Maybe we'll bring up the Weebles thing. Just have a look at these after hours changes. Anything percentage change? So Zscaler ended up down 9.37. Datadog ended up down 8.5%. Still trading at 130 though. It's amazing how high it was. Snowflake now trading at, wow, under 200 again. Snowflake down 7.95. Moderna just getting absolutely beaten down here. 7.33, 126. Wasn't that $500 last year? Qualcomm. So yeah, semis were really getting hit. Boeing was getting hit. I haven't actually checked this, but let's have a look at LMT for a second here. Look at that. It hasn't been that hard if you know where to go. Another good day for Lockheed. Hey, what do you think about the DAX 40? Yeah, that's a brutal index. Oh, DE 40. Where do you think that should bottom out? So I've been thinking about this myself. I've been saying, well, where does this thing bottom out? Does it bottom out on, no, I don't think it's going to 8,000. Does it bottom out somewhere here this November 2020? I kind of think that might be where it bottoms out. So my thoughts here on the DAX is if the S&P 500 goes, the DAX is probably going to go with it. And we could be down here. This is a brutal, like, you wanted to talk about people that have said, oh, I'm shorting the markets. I'm in the market short, blah, blah, blah. And they're shorting the S&P 500 and NAS. There's easier shorts out there, guys. One of the easier shorts was this market, the DAX. I mean, it broke through support. We covered it heavily here on the channel. So if you haven't already subscribed, definitely, because we covered it. We talked about the Wyckoff. And you can't say, oh, well, you were late, Tom. We were right here. In fact, it was our lead indicator for the rest of the market getting destroyed. Sagari Izumi says, no comments at 20-year picture. You mean 20-year, 30-year treasury. You shouldn't talk down to people either, whether they're low dollar day traders or not. So Gary, it's not the right way, man. Like, you think about it, it doesn't matter whether you trade $1,000 or you trade $1 million. It's still important to you. So to call somebody like less than something because they're all like low dollar or they're low dollar, it shows an arrogance. And if you're an arrogant person, then you will lose and the market will kick your ass. When you get arrogant, markets kick your ass. Alpha T says it was INRG. Oh, did I put INGR? Probably did. I'll check it out in a second, Alpha. So yeah, look, my bottoming here is probably 11.44. If you're talking about 20-year, 30-year bond picture or treasuries yield, yes, it's still inverted, and that's a problem. INRG. Okay. Oops. Wonder I got it. What, this? Weekly looked good. So that was nice. Good rejection off the low. Took out the max kind of pain concept. Yeah, daily looks fine as well. I mean, if this is it, I don't really see any problem. If it isn't it, just send it to me in Discord. Cameron Chevalier, $2. Too late to get into LMT/NOC, US military companies. LMT, probably not. NOC, look, they're probably not too late to get into, but you got to be prepared to cop a bit of a pullback. The reason I say they're not too late to get into is because they're only really trading off part of the news. So as you see budgets coming out in Western nations, they will all include percentage of GDP expenditure. So I doubt that these trades have just begun. I think there's more in them, but you've got to have a longer process. Alex Aman, new member. Thank you very much. Appreciate that. Thank you very much for joining us. And we'll do crypto now. That is true. And I Basically, everyone is low dollar versus someone out there. Yeah. Yeah. Some of the best rich dudes or rich people that I've ever met, they don't really treat you poorly based on how much money you have. They kind of just chill, and they're comfortable with what they're doing. And I think that's pretty important. All right, so let's move over here. Bitcoin down to 38 or underneath 38. It went down to 37.17. Look, crypto market's definitely taking a beating again. It's really much more resilient than I thought it would be. I thought Bitcoin would already be down at 30,000. I really did. I'm not comfortable with Bitcoin. I just don't know. Like, I mean, for me, you kind of breach through here, 34. I don't trust 34 this time round. It's amazingly resilient. I really don't get it. I would have thought we were at 30 already. It is a bit of a risk off asset. So when risk offs, they usually does beat it down. It's not a hedge against inflation, in my opinion. It is certainly outside of the monetary system. Obviously, you've got the rubles flowing into it, which is undeniable. But to think that this particular crypto is holding still, I'm surprised. So for me, it's really just coming back to, we breach underneath here, which is this 37,000, bring on 34. I think that would be fairly quick, and then 30,000. And then of course you get underneath 30,000, could be 20K. Could be really 20K. And if it's 20, that will be a brutal day. And I wouldn't even be looking at this market right now. I would continue to watch the NAS. And what the NAS is going to do is going to dictate this one, in my opinion. Well, that's true. Quick gains versus long term. I'm not a big fan of the SPACs last year. And long term and quick gains are a little bit different as well. I mean, they're investment philosophies versus, medium term versus everything else. So if you're looking at this from an investment philosophy, and you're looking at like the US 20-year, US 30-year, like, you look at this, you don't like it. It's bad. This first sign's bad. If I was looking at it from an investment perspective, though, I mean, if I see the US 2-year go against the US 10-year, I mean, for me, it doesn't mean crash happens tomorrow, but it will be pretty bad. We do not want these to invert. Like, inversion, when it happens, it's never good. It's only one time not worked in the last like 30 something years, and it ended up leading into a massive crash. So inversion is only part of the picture. It's not the golden canary that's by itself fantastic and every time it works. And it's pretty delayed, like it's so early. But if you know some of the other reasons why markets go down, then yeah, it can be big here. Darren Jones, $10. Thank you very much. Hi, Tom. Please show me the put wall for SPY expiring Friday. Yeah. Though I wouldn't use, you'll notice I've refrained from it recently, and that's because I'm not going to use the put wall when I don't think it's going to work into all this news that we've got going on out here. Friday, so that'd be the 11th. Let's get this up. SPY. So if you have a few good indicators along with the US 2-year, 10-year, you can kind of really understand when we go into some kind of recession period, or we're about to. So from this angle, the only standout, wow, there's a lot more calls than you would think. God, they're good at sucking in calls. Look at these people, poor people getting destroyed with their bull calls up there. So 400 seems to be the put wall, which would make sense. I mean, we're not even close to that yet. We're still sitting here. So you got the 420 and you've got the 400. You get through 400. I think they could afford to get it through, but this is the one that seems to be the big one, the 400. I just want to have a look at SoFi for a second, because a lot of people love this stock. I'm just interested to see how it reacted. Yeah, 962. Interesting. So still incredibly sick. Yep. Not the best. Yeah, if I missed your comment, just and you paid and you subscribe or paid money or something, just message me in Discord. I don't try to miss people. Usually the mods send it to me. Oh, okay. We've got a question here from Muhammad Finken. Thank you very much. Appreciate your membership for so long. 11 months of Stonk Squad. Appreciate that, man. Hey, Tom, wanted to ask, where do you see oil going? And can you argue that we were already headed into recession in 2019 that was delayed by QE? You could certainly make that argument. So, both questions are really tough. Oil for me, it's like when something goes parabolic, you can't exactly predict what happens next with it. I mean, if I was looking at this chart, I would say, okay, it makes sense why it bought off here. You've got slack demand. So you've got resistance, support, and you've got 2 weeks. I'm not really a huge fan of making predictions when you've got governments floating around investment, okay? Because they can make all sorts of investment. They can make huge, huge announcements. This is a news trade. This is not a technical trade or, just a standard money flow or anything. This is a news trade. This is a geopolitical situation. So it's very difficult for you to predict. I mean, if you're looking at this, you would say, at least initially, if I had ignored that candle, you would say, okay, it looks bullish. Then we got that reversal candle here on the 2-hour, but we've so far still got a bit of bounce. So as long as it holds above here, you could still say bullish. Now, if you're looking at on a weekly, you would say 150, 146, because that is the previous high of oil. People forget in 08, oil got to $145 a barrel. It's been there before. So I could see it getting there, but that's just a complete, as of parabolicness, I'm guessing. Now, your other question was, are we already heading into recession in 2019 that was delayed by QE? So I believe that the 2020 crash was going to happen anyway, regardless of the pandemic. I believe that this was coming. It was coming. I also believe that because of the nature, which is incredibly unfortunate, of the pandemic shutting down so much of the economies, that the Fed overstepped and obviously printed. We all know this. They created a problem that you can't get out of. It's short-sighted, and everything in the Western culture now, and most people can probably agree with this, is you could go and ask everyone on the street. And here's the thing that's weird. You could ask any retail person. You could go down and ask someone that doesn't know anything about the economy, and you would say, do you think these interest rates are stupid? And they'll say yes. They're too low, is what they'll say. What are they doing? What are those people on Wall Street doing? They'll say. The interest rates are too low. Most of them will say this. They will also say, stop printing. Even though it may affect them and it is not public opinion, they don't like these two things. Even people on the street know that this is a big problem. Whereas Wall Street over here are just like, haha, rich profits for us right now. What has happened is they have ruined, I've said this since the start, they have ruined the money system. And I would suggest, if you haven't already, go and watch Ray Dalio's new video. It explains the big cycle, obviously his big cycle theory. It's very good. It's in our Discord community. It's been shared. He's obviously got his big thing. Now, I don't think Ray Dalio's philosophy here helps us that much from an investment perspective to the day to day or even the year to year. But what it does help you understand is where we're at and the fact that this money printing concept is the downfall of societies. Because it's happened before. I don't want to say it, but it has happened before. And when you understand that, let's say we're 75% through the big cycle, which is where I'm doing. I heard Druckenmiller, one of my favorite investors of all time, a bit of a beast. And Druckenmiller said this. He said he could see that the US dollar isn't the major in 15 years. Do you know how worrying that is? That someone like Druckenmiller would say that the US dollar is not going to be the major currency in the world in as short or as little as 15 years? Powerful stuff. Not good. Mitchell Miller, $20. So to answer your question, we were already going to go into a problem. We've been in deflation and negative growth ever since really 2000 and the GFC. You've been propping capital markets. That's the problem. But that's why we trade the American market as propped by the Fed. What do? You have to kind of follow the flow. Fernando says, Tom, is TradyTix a free software? Have been using Shaggy for the max pain. TradyTix is free for people that are in our private community, yes, but I pay for it. It's okay. When I worry about the market, I go to the mall and see what people are buying and how much. It's a good technique. It used to work very well. Problem is, I go to a mall in Australia, it's inundated with people and they're everywhere buying everything. I don't know what to do. They're all standing there in front of Louis Vuitton, Gucci. They're just big queues. Mitchell Miller, thank you very much as always, Mitchell. Appreciate your support. $20. Hey, Tom, I need of soft advice. Lol. I've been blowing up my account. I said, do my mentoring. I highly recommend it, Mitch. Stop donating here. Do the mentoring, I tell you. I set a max loss limit and have arrived. It is a horrible idea to sit on the sidelines. I hate the idea of missing a reversal. Well, okay, so it's sad that you obviously got hit. It's horrible to sit on the sidelines, but unfortunately, the rules of trading are this. Often, patience, okay? The problem is the rule of trading number 2 is it can be boring. Not every day is a great day to trade. People say often to me, trading is boring, trading is lonely. And it's why many of you are probably in the chat right now. Yeah, I mean, it is. It can be boring, it can be lonely, it can be all of these things. But for me anyway, the way I like to think of it is, unfortunately, if you're going to be a good trader, every top guy, Druckenmiller, anyone will say you need discipline. And discipline comes from being able to understand the system. And I would highly suggest that you do the mentoring, man. I really would. Thank you for the donation. If you want to know, though, you need discipline. And it is like anything in life. If you're going to be the best in sports, if you're going to be the best in chess, if you want to be the best in anything, every day you must do effectively a little bit of work on that, improving. It has to be concentrated work. Unfortunately, trading is not hours put into charts equals profit. It is not hours equals profit. Some of the best traders I know put in like 45 minutes a day and they make the most money. Do you think that all these traders just sit there and they're like sitting in front of the charts every minute of the day? Not necessarily. And you could say, oh, well, they're not real traders. They don't day trade. Well, whatever. How they make money is not up to the time they put in front of the charts. So remember, time does not equal profit. Being disciplined equals profit. RuneScape says, if you want to learn how to be a good trader, then sign up for old school RuneScape and start flipping soft clay on the Grand Exchange. Actually, when you think about it, I mean, I used to play Diablo 2. I still do, I guess, so sometimes. But Diablo 2 is a game out there and it has trading properties. And for anyone that's played Diablo 2, you'd know that a big part of the game was trading. I remember years ago when I was like, God, must have been like 10 or 12 or something. I used to sit there and I used to open up games and I would trade like certain armors for certain other things that were rip off, and I would make combo deals, and it was very much like that. Yeah. Obviously, you want to make sure that you have number one best character. So I would trade myself up to, like, I think at one stage I had about 2 to 400 Sodgers, which is a lot. But the point is that that is effectively, yes, trading. So all those games, yes, Tibia, exactly. Diablo's OP. That's right. It's not IQ based either. People think that if they're smart, I was talking to someone the other day and they said that all my friends are smarter than me, yet they can't make money. And I said, let me guess. They're going quant and they've got macro quant everywhere and they've got like 500 different things or inputs that they're looking at, and then they get confused. And he's like, yeah, they get completely confused. He does. They have like so much information. It's like insane. Like they have spreadsheets on spreadsheets on spreadsheets. Like, yeah, because the problem is that they haven't kept it simple, and they don't have a few very solid kind times, so they just confuse themselves. So yes, it's a big thing. All right, guys, we will. Ryan, we should. Yeah, well, we should play. We should play. All right, guys. Well, anyway, very good. We need to see what happens with this market tomorrow. Unfortunately, I'm not convinced it has hit the lows because there is no support here technically. So it's kind of in free fall at the moment. And that's the way we're looking at it. Obviously, we're going to have to keep watching this 2-year, 10-year getting closer together. Not great. Dollar index is continuing to bull, which just shows that people are going to safe havens. And another thing that I would be watching, if you're not watching it, which is in the euro, look at this euro US dollar. It's going towards, pretty big crisis periods that haven't been seen in a while, and particularly the euro Swiss. So yeah, the euro Swiss is in some pain at the moment, and this is because people are fleeing the euro and going into the Swiss bank. Now, I don't necessarily think that this is a good. I would be very careful with what happens here. I know well that the Swiss bank hates having runs on their currency, and I have a feeling that they will come in. They usually like to powerhouse these kind of moves. We'll find out whether they do it again. A few people saying, give us 380, baby. Yeah, 380 would be pretty big here. So certainly a big one. Thank you also, Monica. And also, yes, like and subscribe if you could. Appreciate that. We're getting pretty close to 80,000. So if you could take us over 80,000, I would be very, very grateful. We're on the road to 100K this year. I really appreciate it. Thanks, everybody. See you soon. Thank you for the donations today, kind words, and hopefully everyone is better positioned. But just remember, it's not about just tech. You're right long term, sure. But when you're trading, I don't care about your long term. Look outside the box. That's the big one. Catch up.